Welcome back to Yahoo Finance Live on this Friday morning. I want to get right to our next guest. Don't want to waste any time. And friend of the show, Sam Rowe, the editor of Ticker, .co. Sam, you have a new note, and it's titled "The Most Bullish Story in the Stock Market Right Now." Amazing headline. I would expect nothing less from you, my friend. So what is the most bullish story in the stock market?
Yeah, it's analyst forecasts for S&P 500 earnings continue to go up. I feel like, this is something that we've actually been talking about, on Yahoo Finance for a couple of weeks now. And, it's funny that that particular part of the story, the earnings expectation, has not been changing. But all the sort of variables and risks, that should be affecting these numbers have been changing. I think the last time we spoke about this, since the last time we spoke about this, we've had the yield curve inversion. Inflation has only gotten worse. We're hearing about a Federal Reserve that's only, getting even more hawkish with monetary policy. And, of course, we have all the uncertainty related around the war in Ukraine. And so what have analysts been doing for the last couple of weeks? They're looking at the numbers, they're talking to looking at the reports, industry data, and lo and behold, they're revising their estimates up.
So why, I guess, is the question, Sam? Why are we seeing this optimism here, given all of those headwinds that you're talking about?
Yeah, I think this is something that, even Fed Chair Powell mentioned a couple of weeks ago at his Fed conference. And, one of the things that's happening is there's continues to be tremendous amounts of pent-up demand in the economy. And a lot of it is tied to, persistent supply chain issues. One of the reasons why we continue to have inflation is because of stuff like supply chain delays. And, why do you have supply chain delays? Because corporations, consumers, they still want to buy stuff. There's still a tremendous amount of demand for stuff. So even though there might be, some demand that's lost, at the margins, because of these, backups with backlogs and supply chain delays and stuff, companies are continuing to sell. And so I guess really the only thing that's probably changing is companies, continuing to raise prices in order to sort of preserve their earnings. So yeah, an increasingly challenging economic environment, but you still have a business community and a consumer that has a very strong balance sheet that's still going out and doing a lot of shopping.
Sam, bear with me on this. So just anecdotally, the team took me out for my birthday to a bowling alley. Very, very beautiful. Place was packed. Last weekend, my local Target, packed. I tried to buy some new golf clubs. Everything was sold out. What I ended up getting took me about a month and a half to get. Is it just strange to hear so many folks on Wall Street starting to predict a recession in the country?
Yeah, and you can't blame that. I mean, something to remember about the beginning of a recession is recessions don't start when things are bad. Recessions start when things are good. Remember, it has to be an inflection, at some sort of peak. So, I guess it would make sense that, the recession calls, begin when things are really good. Yeah, and it's a lot of the confluence of all these different signs, including the inverted yield curve that people rely pretty heavily on. But yeah, when you hear from the Federal Reserve and all the various Fed presidents and governors talking about all the different things that they're going to be doing and in order to keep inflation under control, all of it sounds very recessionary. What we were just talking about, all this stuff about pent-up demand and the strong consumer and strong businesses doing all this buying, that's what's keeping inflation up. And the only way the Fed is going to accomplish what it wants in terms of getting inflation down is, if they can figure out how to make the supply chains more robust, that'd be great. But I don't think cutting interest rates will suddenly put more boats, in the Suez Canal or whatever. So they have to slow down the economy. And it's almost, they basically just stopped short of saying that they're going to, try to cause, negative growth in the economy.
And to bring it sort of back around to earnings as well, when we're looking at the Fed's effect and all of that, I mean, the focus is always on forecasts, but it feels like right now, because of what we're talking about, the focus is even more going to be on forecasts. And then I know you're going to continue to watch those earnings projections and whether analysts are revising them up or down. Like, And the other thing, I guess, is that analysts who cover individual companies, they don't tend to look necessarily that far out. They're pretty focused on the next quarter, maybe the full year as well. So when are we going to start to get glimmers here if things are starting to go south?
Yeah, that's a really great question. And, I think people have been asking that exact question for maybe the past year, when inflation started to creep up and start to eat away at or supposedly was supposed to eat away at profit margins. This past, Q4 earnings season, Q3 earnings season, you go back to Q2 earnings season, that was always the concern. But, companies just came back and said, we're knocking it out of the park because we're just raising prices. But yeah, no, Julie, I think this is, increasingly a concern, especially with, signs like the inverted yield curve that, has historically told us that a recession may start anywhere from 6 months to 2 years from now. So it might be this earnings season where executives finally say that demand is actually kind of slowing down. It might be the next earnings season, but it might be that we're finally due for it, especially when you have the Federal Reserve and policymakers being so aggressive about trying to cool the economy off.
Sam Rowe, the editor of Ticker.co. Always good to get access to your top market mind. Have a great weekend, bud.